All right, so after 7 years in the stock market, these are the biggest lessons that I learned myself. And I learned these through trial and error, so that's why I'm trying to tell you now so you don't have to go through it yourself. All right, let's get it. Number one, you got to get in as early as you can because the amount of time that you spend in the market is the runway that you have to compound your money. Go look up how money compounds in the stock market. Once that baby starts rolling, you get something called the snowball effect. At first, I'm gonna put the chart right here. At first, it's not gonna be much. You're just gonna be contributing and it's gonna slowly grow. But after a while, it's gonna grow so exponentially that it outpaces the money that you're putting in and it just grows by itself so big. For that to happen, you need time in the market. And the only way you can do that is to get in as early as you can. Now, luckily for me, I did get in when I was 21 years old, which is relatively young. But I've seen a lot of people, my own family members, my friends. I just see people who just aren't invested and they're even older than I am right now. I'm 28. And I'm just like, bro, you're leaving so much money on the table. Inflation is kicking our ass. Your money's not doing anything in a savings account. So you truly are leaving a lot of money on the table if you're not invested into the stock market. It's not really a lesson I learned. It's just a lesson I've seen through observation. But even then, I wish I would have came in at 18 because the other part about getting in as early as you can is then you have more time to learn. I've learned from 21 to 28. But I could have been learning from 18 to 28. Those 3 extra years at the beginning when there was less at stake in my life, that could have been very beneficial, but I won't know that. So I'm so glad I got in when I got in. But for you, if you're not in it yet, you definitely need to get in now. I don't care how old you are. You need to get in immediately if you're not. And if you are, perfect. Then you're already there. Now, my second biggest learning is to prioritize ETFs and index funds. If you don't know what those are, go look it up. But basically, they're a basket of stocks that are chosen by the professionals. For the most part, if you pick a good one, it's going to perform better than stocks out there. Now, the caveat is it's not going to go as high as some stocks out there, but it's not going to dip low like some stocks. It saves you the time, the stress, and the know-how of how to pick certain companies because picking single stocks is very hard. Professionals do it and they don't even do it well. So you, as just a part-time person, not going to be doing it well either. I certainly don't. But in the beginning, you should just be picking the ETFs, especially the S&P 500, VOO, FXAIX, whatever. Just look up an ETF fund that tracks the S&P 500 and you're going to be good. And Warren Buffett, if you've heard anything about stocks, you know who Warren Buffett is, GOAT investor. He says 99% of people should just be invested into that. And that's still going to beat hedge funds out there who are professionals at this. So without much time, you just put your money there, don't think about it, and it's going to grow. That's all you want, okay? And then in the meantime, you can learn how to pick individual stocks. But I would say just ETFs. I swear to God, at the beginning, I was picking at the beginning, I was trying to pick stocks, and it didn't go very well because I didn't know what I was doing. As soon as I put my money in ETFs and index funds, boom, my account's going way better. I urge you to at least start there. And then if you want to branch out and learn more, go ahead and do that. But at least start here, build that foundation, build that pillar. Yeah, as a matter of fact, that's what I call it, is my portfolio pillars. The ETFs right there, those should be like the foundation of your portfolio, and then you can pick stuff on top of that, but that's where you should start, okay? I'm gonna leave it there short for this video. Now, the next thing, a very big thing is, do not get distracted. If you're new, you might not know what this means, but if you've been in the market a little bit, then you're gonna know. The more time you spend in the market, the more things you're gonna learn, the more things you're gonna discover, more things that you're gonna hear from other people. You're gonna hear something about trading, swing trading, day trading, options, buying low, selling high, timing the market. That right there is distractions. It takes away your mental and your capital from, the proven path. And they're gonna hype you up. They're gonna be like, yo, you gotta buy this at this price and it's gonna go up, blah, blah, blah. You're gonna make 200, 300, 400, 500% off of these options. It's gonna be crazy. And it's gonna sound like, oh my God, why am I not doing that? And why am I buying something that's only returning 8 to 12% a year? But the thing is, with those big percentage gains, it only happens like a very small amount of time. And then the rest of the time, you're actually losing a ton of money, which is important because that money that you're losing could just be into something safe that's growing money. So now you're not only losing money, but you're losing potential money as well. So it's all bad. So I just don't do it. Like if you hear about those things, just trust me, don't do them. It's like drugs. You don't need to try it to know, but you just shouldn't do it. Now, with that being said, I know you're still going to do it because I did it. And that's how I learned about this. I did it. Others have done it, and that's what they're going to tell you. Anyone who does it, fails hard, is going to come back and be like, yo, to only do index funds and ETFs. But here's what I say. If you're going to do it, because I know you will, allocate a very small portion of your portfolio to doing it. 5, maximum 10%. Maximum. Because the thing is, when you do these things, it's very possible that you lose 90% of the money that you put in. So let's say you put in 10% and you lose 90% of that, then you're left with 1% of your portfolio. That's okay. Screw it. That's fine, you know? But if you were to put 100% of your portfolio into this method and you lose 90% of it, now you lost 90% of your capital, bro. Okay? And if you can't turn 10% into 20% into 30%, why would you go putting in 100% of your money in there? So just try it with a small portion just to feel it out and learn and experience it, but don't be doing it with all your money. The majority of your money should be going to the safe stuff, okay? Because you worked hard for your money, you got to protect it. Part of the game is protecting it, and I wasn't doing that in the beginning, but now I know, and that's something I just want to urge any new investors out there. All right, now, my fourth point, if you don't take nothing else away from this video, take this. It's to consistently contribute and dollar cost average. That right there is the winning strategy. I don't care what you look up, who's going to tell you what. This is the winning strategy right here. I've learned this from older investors, from the gurus that I don't know, people in my personal life that I do know, and through experience myself. Consistently contribute and dollar cost average. And logically, it's going to be the one that makes sense. Consistently contribute. That means routinely you're putting money into the market. And dollar cost averaging, DCA, is the method in which you enter these positions. You got to go look this stuff up. The more money you put in, the more capital that you have that's going to be able to like compound. And the more compounding that happens is just boom, boom, snowball, but at least you're packing on the snow. And then dollar cost averaging is going to save you a lot of time and mental peace, bro. Because then you don't have to try to like figure out when should I buy it? Like, should I buy it when it's low? And then you try to buy it low, and then you're like, but I don't want to buy it too high. Like, bro, it doesn't fucking matter. Just continually buy. And then your price is just going to average out to be like somewhere in the middle, and you're going to be profitable over time. And you just got to do this for a whole 2 years, I'd say. And then you'll learn like how this truly works. And then you'll see it for yourself, and then that's when you'll believe in it. But like, I know right now, me telling you, you're like, whatever. But please go try that, okay? I swear to God, whatever I was doing before, I wasn't consistently putting money in. I wasn't dollar cost averaging. I was trying to time it, but I realized like, I'm not like that, bro. You're going to walk in the market, you think you're like that, but you're not like that. We're not like that, especially when we're not doing this full time. Just consistently contribute and dollar cost average, I beg you. Now, consistently contributing and dollar cost averaging is actually a lot harder than it sounds, because you have to remember and do the math when you get your paycheck, like to put money in there, how much money to put in there, depending on how life's going. And you also have to remember to go actually purchase the stock. So number 5, what I learned and has transcended how I perform in the stock market is automating the process, automating the consistency, bro. And how did I do that? So simple when you think about it. I went into my payroll portal stuff and found the direct deposit. And then I found out that brokerage accounts, you have a account and checking number. So you just direct deposit into your brokerage. I set up my direct deposit in a way that, I put my necessary money into my bank account to pay my bills, groceries, all my needs. And then I set aside some money for fun, I like to call it. And then the remainder, bro, into the stock market. Because where else is this money going, right? Besides your savings and whatever, but like majority of your money, if it's not doing anything, put it in the stock market. So I got all my money going into something I call the war chest. And then in that war chest, I know how my paycheck is set up and how my spending goes, which is something you should learn for yourself. But I know how at a minimum amount, that's going to be coming in every paycheck into my brokerage. But there's going to be more on top of that. But I then set up recurring investments into these ETFs and index funds that I pick. And so my brokerage is automatically buying it every 2 weeks for me. Every time I get paid, I'm also buying some stocks. And the thing is, I don't ever even see that money. It just goes directly into my brokerage, and then it's being bought into these stocks. So it just automatically going there. And I swear, bro, before I wasn't doing this, and sometimes I would forget, and it would just ruin the consistency. And I didn't even track nothing, so I don't even know. But now that I've been doing that, I removed myself from the equation. It's automatically doing that. So I know money's contributed, and getting invested, and it's growing automatically, bro. So I don't have to think about it. I've guaranteed the consistency. So few things in life can you guarantee consistency, but for that, you literally press a few buttons one time and it's set up. And that's what I've done, and that's what I do, and it works. Those last few points, bro, that's what you need to do. And then actually, while making this video, I realized there's a sixth thing that I've learned, and that's that you have to continue learning. Throughout this video, I've mentioned a lot of jargon, you could call it, or just words, phrases, acronyms that is very commonly used in the stock market, in stock talk. And if you don't understand those things, you gotta go look it up and learn what they mean, because that's the thing about the stock market. Like, we didn't learn this in school. You're just learning it online through people, whatever, but you're gonna hear things you don't know and you gotta go look it up. You gotta learn, and then you gotta learn by doing. So the stock market is just like anything else. It is a skill, so you got to continue learning and developing at the skill in order to get better at it, and in order to grow your money easier and quicker. I'm constantly learning. Like, I'm learning what to do, what not to do, you know, how I can be better, things like that. So that's just every investor out there, because you want to continue to become a better investor. It's a skill at the end of the day. All right, and that is the 6 things that I've learned in my 7 years in the stock market. Now, I did speak about ETFs and index funds, but it was very general. So if you want to know like what ETFs and index funds that you should be picking to get a safe and high gain portfolio, then subscribe to the channel, because that's going to be one of the next few videos that's coming out here. My boy Alex and I, we're just trying to help everybody out, teach people what we've learned here at ODW. So we're going to take care of you. Just make sure you just subscribe, and we're going to get you right. But yeah, if anything here confused you, or you just have more questions for us, let us know in the comments. We read all the comments right now. Small growing channel. And yeah, we'll see you next time. All right. ODW, this is Hui. Peace out.